Everyone, how we doing today? So, Fed lowered rates. They lowered rates. Unemployment's at a record. Earnings are great. They lowered rates. So, even though we disagree with it, at least based on yesterday's video, a lot of you disagree with it, as did I. I think we all knew it was coming. So, what do you think? What do you think that what do you think it means to us? Right. So I did some thinking on it today. Got my notes, and this is what I really think the Fed lowering rates means to us. Let's break it down between kind of consumers, real estate investors, and then maybe even companies. Because I think lower rates could mean, different things to different folks. So, first off, when you talk about just the general consumer, um, there's kind of the spending side, credit cards, and then there's the saving side, the savings accounts, money markets, whatever it is. What I thought was pretty funny is a lot of folks will talk about great lowering rates reduces the rate on my credit card. So I did some math and double checked this online, and assuming you have the average balance credit card, which is about $8,600 today, and you have an average credit card, which is an APR of 17.5%. If you do all the math on that and rates drop a quarter, you save exactly $1 a month. $1. So, while you may feel good with lower rates, if you don't actually understand the math, you could inadvertently go out and buy more stuff because the rate's lower and hurt yourself, right? So do the math. Realize it's not really there. And then obviously saving money, right? We all know that our savings rates are going to go down. About 5 months ago, I was getting over 2% at a Wells Fargo account, and now it's going to be a lot less than that after 3 straight rate cuts. So, again, look around. The thing I did see online is, there's a pretty good variable between low and the highest savings rate. You might need to check those out. I may even have to look around and see what's out there because, 0.1 versus 1.1, it's pretty significant. So that's the kind of consumer side. Then if you think about real estate investors, rates are already really low, right? Just under 4% was something I saw this morning. They're going to stay low for a while. I think cash out refis are going to be lower. I think HELOCs, right, home equity line of credits are going to be lower. But not only lower, I think it's going to be easier to get them. Right? I think they're going to because they got to make it up in volume, I think, right? A lot of these banks have infrastructure and people and all of that to process loans, and I see at least in the Bay Area the buying cycle is dipping. So maybe they go out and they try to get some home equity lines or cash out refis or something of that nature. I still think it's the right time to do 15 or 30-year fixed mortgage if you're buying your first rental, right? If you're going to do what I talk about getting your first four, definitely get 30-year or 15-year money depending where you are in your investing life cycle, right? Um, you just can't go wrong. Be conservative, right? Make sure you put the right down and all of that. It's going to be pretty important. You're going to feel really good because eventually this will turn around. And then if we talk about businesses, I think we're already starting to see what this low rate environment's going to be. Is companies are going to be buying other companies, right? If you really peel back what businesses are doing, they're they've reduced business investment. I think 2 quarters in a row now, and pretty significantly. But with low cost of capital, they're going to go shopping, and they're going to try to squeeze profit revenue out of other ways. So I expect there to be a lot of merger talk, right? I think just in the last 2 days we talked about Louis Vuitton buying Tiffany. We talked about potentially, I think it was Google buying Fitbit. And just today, actually over in Europe, Fiat and Peugeot are merging. I think we're going to see a lot of this. And with that, historically speaking, um, There's a lot of quote unquote redundancies and things of that nature. So there will be some people impacted when mergers happen. Just plan for it. So I think businesses are going to benefit the most, at least if you consider acquisitions to be beneficial. People are going to have liquidity events, things of that nature. I think the consumer is net negative, right? Because again, savings on credit cards $1, while you're earning less and less on savings. Oh, SoftBank buying WeWork. Oh, that is so funny. I actually had WeWork on here. That is so funny. I'm so glad we talked about WeWork all this time. I actually read something pretty funny yesterday, and somebody said the intrinsic value of WeWork is zero. Zero. I was like, oh, that's not good. I'm glad we talked about it. Yeah, it's that whole that whole that whole thing is bad. But again, think about it from the employee perspective, right? They were days away from their liquidity event, from buying their houses or new cars or whatever they were going to do. Now they have what 30% of them are being let go, and now you're going to be owned by I don't know what you call them, a hedge fund or SoftBank. I think it's in Japan. So crazy times, right? Crazy times. Very much like the dot-com era. If you were investing in the late '90s, all these unicorns are very much like the stuff in the '90s, right? Just burning cash, just freaking burning cash. The one thing I saw in the Fed rate or Powell's announcement that kind of gave me encouragement. Let's see, Money Maven. It's a shame that they'll roll up to the IPO market. Yeah, yes, Money Maven. That is a shame, if not criminal behavior, frankly. I'm glad that the public market revolted and threw up that garbage that they were being given. And can you imagine they were once valued at $80 billion, and now, last I heard, it was sub eight. Oh, it's crazy. Anyways, what I was saying about Powell, the Fed rate cut, is we can plan for rates to be low for years to come. Um, Powell said that he or the team is not going to raise rates until inflation is significantly higher. Significantly higher, right? Doesn't really have a number, but significantly higher. I'm guessing we're going to have rates down here for 4 or 5 years. So if that's the case, what do, right? Well, reposition debt, put in better structures. Companies are going to go shopping. It's you're not going to get anything in savings. So make sure you're buying assets, right? Don't go on silly spending sprees. We are at the end of an economic cycle. Could it go on a couple of more years? Absolutely. Will it? No idea. But when unemployment ticks up and people get more nervous, this thing has to end eventually. Uh, Fade the dollar and buy commodities. Not yeah. Commodities are hard to store. I've done that before. Yeah, yeah. All right. So what else do I got? So trade war. Trade war had a positive trend for 3 weeks, maybe. Right, talking about this phase one. They were going to sign it in Chile, and then Chile had some kind of political turmoil, and the whole event got canceled. Again, nothing related to the signing, which was cool, right? Um, but now there's some I don't know, quote unquote Chinese officials saying that they don't trust America and blah blah blah. That could just be noise. But again, it's the first negative tick on the trade war talk in at least 4 weeks, and that's saying something. I think both countries want an agreement. I think both realize that there's been a lot of pain inflicted on both sides, and they want to get this behind them. All right, if they sign phase one in November, let's hope for everyone's sake we get something inked that puts us to bed by the summer of next year. That'd be pretty good. And then lastly, on a couple of earnings, Apple um, did it again, right? They exceeded. I think Apple is one of those stocks I watch, much like Starbucks, because it's a want and a need. I think Apple, at least for most folks, is a want, right? I want the new phone. I want the new camera. I want, I want, I want. For some people, it's a need. I get it. You're in the creative profession and whatnot. I'm not saying Apple doesn't make great devices. They do. I'm talking to you on an Apple device, for example. Um, but I think it's a want for most people. And shoot, they did $64 billion in wants. So the American consumer, really around the world, is still feeling good if Apple can pull $64 billion. And then Facebook also was up, and their revenue per user was up, which is impressive, given that people have been talking about the demise of Facebook for some time. So all in all, again, all in all, earnings were good. Consumer looks healthy, growing 1.9%, like we talked about yesterday, and yet, uh, the Fed lowered rates. So, and this could all be about the strong dollar for sure. It could be all about the strong dollar, which is something I need to research. I'll probably look at that over the weekend. Um, it's just a weird time, right? Ten years into an economic cycle. We all know economic cycle is real. We have an election cycle next year. It's uh, it's just interesting times. So it's why we look every day and we try to figure it out. So it's going to be fun. And I have another interview today, which you're all going to love. And we will talk to you tomorrow about the market. Take care.